U.S. President Donald Trump, again targeting trade partners, now with a new order for 10% tariffs on softwood lumber. For more on what it means for the industry, let's go to Daryl Swetlishoff, Senior Managing Director, Head of Research with Raymond James. Thanks for joining us today.
Good to see you, Marla.
So this latest announcement lifts the tariff burden from 35% to 45% because they were already facing markups. How will this impact the industry?
Well, Marla, I think it's going to be, it depends on two things, your company-specific duty rate and how much of your shipments currently cross the U.S. border. And so, for the smaller private companies in Canada, and that's about 2/3 of Canadian lumber production is just companies with assets in Canada, it's pretty difficult. We think they'll be losing about $130 of EBITDA per 1,000 board feet at today's lumber price. For the larger public companies with some U.S. assets like a Canfor, West Fraser, they're going to have more options going forward.
Okay, so which Canadian companies would you say have the most exposure to the new duty?
Again, it would be any company with most of their companies or their assets located in Canada.
Okay.
So
which you said are the smaller ones.
Yeah, about 2/3 of our production capacity is just that. So, fairly devastating for the average Canadian company, without a doubt.
They've been dealing with tariffs already. I'm wondering, have they been passing them through to their consumers, their customers, or have they been absorbing the tariffs right now on their own?
Well, it's been an interesting dynamic, and that's a great question. Since the tariffs more than doubled to 34.5%, lumber prices are actually down about $120, or roughly 22%. So the tariffs have gone up, and the price of lumber's gone down. That's really the source of the squeeze that we're seeing right now. So, our view is that this isn't sustainable. These are pretty material losses, and we're going to see a lot more curtailment announcements in the near term.
So you mentioned the flexibility some of the larger companies might have. I'm wondering, based on that, because they might have U.S. assets that they can sort of switch things to, what kind of volume change do you expect to see for shipments going to the U.S.?
That's another great question. In fact, we had some data in August. And August is the first month where we saw the 34.5% duties. It wasn't the whole month, but it's partial. And shipments from Canada to the U.S. were down about 30%. That's pretty material. It's about 3 billion board feet annualized. So we're already seeing an impact at the 34.5% level. So bumping that by 10 points to 45%, we think that's going to continue. We think that leads to less wood flowing to the U.S. market. And look, lumber prices have to go up from here. But we think the shuts happen first, the shipments go down, and that's when we see the prices rise eventually in the U.S. market.
So as you know, Daryl, the steel industry been hit by the 50% tariff, same for aluminum. Ottawa has said we want to buy more Canadian steel, and we want governments across Canada as well as private businesses to turn more towards Canadian steel. Is this a policy that you think could be made available to the lumber industry as well and make up some of the difference that would normally go to the U.S.?
Well, in fact, the federal government did announce a $1.2 billion package to help aid the industry, and part of that is developing other markets. The challenge is just the volume of wood. Canada is a country covered in forests from coast to coast, and we make a lot of lumber, and far more lumber than we could ever consume. So, meeting that challenge, like replacing the 12 billion board feet we're currently shipping domestically or to other countries, be very difficult. Now, the flip side of that is that the U.S. doesn't make enough lumber for their own needs as well. So they need our wood. So in our view, the market's going to find a way to work this out, and the mechanism will be higher prices. It's just, the pain associated with getting between here and there is something we're watching closely.
How would you advise investors on the other end who are sort of watching all of this play out?
So what we're watching for is curtailments. I think that's going to be the key catalyst is curtailment announcement. I know one Canadian public company, GreenFirst, announced some curtailments today. There's been other companies announcing. We think it's going to be those shuts that reduce the shipments to the U.S., and that's when we start seeing the market balance and the tension start coming and prices starting to move higher. higher prices is what we need for the stocks to work. The best positioned stocks like Canfor, like West Fraser, large, liquid, well-capitalized, material assets outside of Canada. For Canfor, only 20% of their shipments cross the border. For Interfor, it's a little bit more, 25. West Fraser, maybe 30% of their shipments. So, they're going to be coming through on the other side. And the good thing here for investors is valuations. We're trading at great financial crisis or COVID era lows.
Yeah.
Half book value in some cases. So it's hard to go too far wrong as an investor. It's just that the timing on your returns. We think there's going to be a nice lumber bull rally, especially when rates come off.
Yeah.
But maybe not tomorrow.